Joining us now to talk about all of this is Hilton President and CEO Chris Nassetta. Welcome back, Chris. Good to see you.
Good to see you, Sarah. Thanks for having me on. Yeah, we're very excited about the year. We had everything at the end of the year was stronger than we thought. We ended up having record earnings on the bottom line, which was terrific, the highest margins we've ever had in the business. The best development year that we've ever had. We signed more new rooms than we ever have in the history of the company, and that is carrying over to this year where our net unit growth numbers are increasing. So, we have a lot of wind in our sails, a lot of momentum, and then, as you noted, importantly, we signed an exclusive partnership agreement that we announced today with small luxury hotels of the world that we're really excited about, that will bring the bulk of that system. There's over 500 small luxury hotels all over the world, and some of the best destinations with a heavy resort orientation that'll be coming into our system to give our customers even more opportunities to stay with us and expand our network and to earn points and redeem points. So overall, really excited with last year, but even more excited about the year ahead.
Well, okay, so I want to talk about all of that, but first on the year ahead. So the guidance did come in a little bit light, and there are some questions about whether the robust demand that you're seeing will continue into the year. Occupancy dropping year over year for the first time in a while. Leisure transient in the U.S. was flat with difficult year-over-year comps. What are you seeing?
Let me take it bit by bit. First of all, our guidance, as far as we're concerned, did not come in light. That was an early view of the market because the way we give guidance, we don't account for share buybacks, which is a significant component for us. It's what we've estimated forecast. We're going to return $3 billion of capital this year, so it doesn't account for that. It doesn't account for re-levering in order to provide that return of capital. And so I think when you make those adjustments, actually, we really did beat the expectations and consensus views. And we feel really good about, the basic fundamentals of the business. The fundamentals are driven by two things: demand and supply. Demand side, business transient continues to recover. It recovered further into the fourth quarter from the third. We think that's going to continue to improve. That's going to be aided by continued inbound international travel. Meetings and events business, which is 20% of our business, is off the hook, as you and I have talked about before in terms of demand. And leisure is still, while it isn't as strong year over year, it is still way over pre-pandemic levels, and we're continuing to see growth even in the leisure business. So when you put all those things together, the fundamentals on the demand side are very good, and that's against historically low supply or capacity additions in the industry that are hovering around 1% against a 2.5% 30-year average. And so the laws of economics are alive and well. Demand remains quite strong, as demonstrated by what we saw in the fourth quarter continuing into this year, and supply is quite low. So we feel, as I said, very good about the momentum we're carrying into the year and how this year is going to play out.